This question comes from Vlad Koptev in Ukraine. He says, capitalization of cryptocurrencies approached that of Berkshire and Apple last year. And clearly, the idea behind crypto will affect conventional banking groups where Berkshire is a shareholder. You always say you didn't go into too much detail to obtain an understanding on cryptocurrencies. So what factors caused you to say that it's a bubble?
Well, generally non-productive assets remain, if you had bought gold at the time of Christ and you figure the compound rate on it, it may be a couple tenths of 1%. It essentially is not going to deliver anything other than supposed scarcity, because you can only mine so many. But so what? I mean, what does it produce itself? The check is a wonderful idea. Just imagine how the world would be without being able to write checks or have wire transfer of funds. But it doesn't make the check intrinsically itself worth a lot of money. And if you said you can't use something called check with a little piece of paper, you'd do something else to transfer money. I think that anytime you buy a non-productive asset, you are counting on somebody else later on to buy a non-productive asset because they think they can sell it to somebody for more money. And it's been tried with tulips, and it's been tried with various things over time, and it does come to a bad ending. You have a hard time. You can think of raw land. I mean, the Louisiana Purchase was, say, $15 million for 800,000 or so square miles of land. In fact, you're sitting on land that came with the Louisiana Purchase, and so what we paid $20 a square mile, and 640 acres in a square mile, and you're down to 3 cents or something. So that was a pretty good purchase of what was then a non-productive property. But it depends. But it's very hard. You can buy stamps. Bill Gross collected a wonderful stamp collection, and it sold for more money in the end. But it's dependent on somebody else wanting to buy, hoping they will sell it for more money, and so on. And in the end, you make your money out of productive assets. If you buy a farm, you try to estimate what the crops, what amount per acre of soybeans or corn or whatever may be raised, and how much you have to pay the farmer that farms it for you, and what your taxes will be, and various things. And you make a conclusion based on what the asset itself will produce over time. And that's an investment. When you buy something because you're hoping tomorrow morning you're going to wake up, and the price will be higher, the only reason, you need more people coming into it than are leaving. And you can get that, and it will feed on itself for a while, and sometimes for a long while, and sometimes to extraordinary numbers. But in the end, they come to bad endings, and cryptocurrencies will come to bad endings. And along with the fact that there's nothing being produced in the way of value from the asset, that you also have the problem that it draws in a lot of charlatans and that sort of thing who are trying to create various sorts of exchanges or whatever it may be. It's something where people who are of less than stellar character see an opportunity to clip people who are trying to get rich because their neighbor's getting rich buying this stuff that neither one of them understands. It will come to a bad ending. Charlie?
Well, I like cryptocurrencies a lot less than you do. And so, to me, it's just dementia. And I think that people who are professional traders that go into trading cryptocurrencies, it's just disgusting. It's like somebody else is trading turds and you decide I can't be left out.
To the extent that we're being webcast around the world, I hope some of our stuff doesn't translate very well, actually.